Hey everyone, and welcome back to the Finance Zone. The stock market always has a few surprises in store, as any investor in 2020 would attest. But by and large, the biggest factor experts are considering as they identify the best stocks to buy for 2021 is the same factor that dominated 2020, COVID-19. 2020's top stocks typically were tied to companies that benefited from new and accelerated trends resulting from COVID-related lockdowns. However, many of the best stocks for 2021 are largely expected to benefit from a return to normalcy and a healing economy. A few of these stocks have been bulldozers for a long time and simply look primed to continue their success for yet another year. Many more of these stocks are clear recovery plays that took it on the chin for much of 2020, but are largely expected to turn things around in 2021. And of course, all this comes with a new White House administration running the show. As nations race to reach the coveted post-pandemic phase, themes like technology, penny pinching, entertainment, and personal health run the best stocks to buy for 2021. Today we're going to be talking about the best stocks to buy in January 2021. Make sure to stay till number 1 to learn the best stock to invest your money in. Number 10. Zoom Video Communications Inc. Zoom Video Communications is a communications technology company that provides a video-first communication platform and web conferencing services. Its cloud platform offers video, voice, content sharing, and chat for mobile devices, desktops, telephones, and room systems. Zoom Video Communications Inc. is an American communications technology company headquartered in San Jose, California. It provides video telephony and online chat services through a cloud-based peer-to-peer software platform and is used for teleconferencing, telecommuting, distance education, and social relations. The platform supports up to 1,000 video participants and 10,000 viewers on a single conference call. In early November, Zoom reached a settlement agreement with the Federal Trade Commission, FTC, over allegations the company misled customers about the level of security its platform offers. Among other allegations, the FTC said that as early as 2016, Zoom inaccurately claimed its services were secured with end-to-end 256-bit encryption, a level of security that allows only the sender and receiver access to content sent over the internet. Zoom agreed to implement a more robust information security program to settle the allegation. Number 9. Adobe. Adobe is best in class in its industry by a country mile. Its grip on the lucrative creative software market has only grown with time, and entering 2021, access to one of its many products is essentially a required cost of doing business in areas like online publishing, film, photography, digital advertising, graphic design, and digital documents. Adobe has the highest gross margin among the 10 best stocks to buy for 2021 at 86% and boasts the second highest net profit margin at more than 31%. Adobe set record after record in 2020 in areas like revenue and cash flows from operations as its years of double-digit revenue and earnings growth continued. The cloud-based software as a service model ensures ADBE will reap high margins recurring revenue from its dominance well into the foreseeable future. Number 8. The Walt Disney Company. Technically one of only 2 names among the best stocks to buy for 2021 that's not profitable, there's no need to worry about the long-term money-making potential of the House of Mouse. To consider Disney's valuation, think of Disney Plus in isolation for a moment. Netflix, NFLX, is the largest standalone streaming service in the world. It's worth about $225 billion and has built up about 200 million subscribers worldwide since its 1997 launch. Disney Plus, on the other hand, is only in existence since November 2019, and it already has nearly 75 million subscribers globally. Disney, which is worth about $279 billion, also has its studio entertainment, media networks, and parks, experiences, and product segments to boot. Analysts expect Disney's parks and cruises to hit operating income, but for its burgeoning streaming platform to become more and more material. In short, GIS is a high-quality blue-chip stock at a good value. Number 7. Facebook. It's more or less tradition now to include Facebook among the annual list of U.S. News 10 best stocks to buy. 2021 will be Facebook's 5th straight year on the list, with shares up 172% since first being named in 2017. For comparison, the S&P 500 is up 85% over the same period. Facebook is a singular company due to its unprecedented scale and user engagements. Its Facebook platform alone has 2.74 billion MAUs used as of September 30, while monthly active people on its family of apps, which also includes Instagram, WhatsApp, and Messenger, is at 3.2 billion. Facebook barely edges out Adobe as the stock on this list with the highest net profit margin at 32% and opportunities to boost monetizing through e-commerce, Facebook Shops, Facebook Marketplace, Facebook Dating, and other areas like virtual reality, Oculus, offers several long-term growth drivers. Number 6. Alibaba Group. Alibaba, like Facebook, is a returning pick from last year's best stocks to buy list. Baba is both massive, it's worth more than $725 billion, and growing rapidly. Sales rose about 30% last quarter. Investors now also have a case study in how the business handles sudden shocks to the marketplace. In a year that saw a pandemic emerge, spread, and shut down day-to-day life in much of China, Alibaba kept growing, and its stock is up about 25% year-to-date. Although it's most notable for being Asia's preeminent e-commerce giant, its cloud computing division now accounts for 10% of overall sales and enjoyed revenue growth of 60% last quarter. At 21 times forward earnings, Baba stock still trades more cheaply than most large-cap growth stocks U.S. investors should have some exposure to Chinese companies, and Alibaba is arguably the single safest bet. Number 5. Nautilus. Workout equipment manufacturer Nautilus is far and away the smallest company among the best stocks to buy for 2021, with a market cap of around $530 million. But again, when compared to more richly valued competitors, investors should realize Nautilus's small size and conservative valuation represent a real opportunity. Nautilus manufactures under its eponymous brand of workout equipment, as well as the Bowflex, Schwinn, and Universal brands. While perhaps not as sexy as the $34 billion Peloton Interactive, Peloton, NLS trades for 10.7 times forward earnings and 1.2 times sales, a steep discount to the 168 times forward earnings and 14.7 times sales of Peloton stock. Importantly, Nautilus is also getting into the lucrative subscription workout business, charging $19.99 per month for its basic online membership that includes virtual coaching and trainer-led videos on its bikes. NLS is practically custom-made for the stay-at-home economy. Number 4. Spotify Technology. It's fair to say that Spotify is the only company on this list that's not yet consistently profitable, so more conservative investors should consider the risks on that front before investing. Analysts currently think the company may take until 2022 or 2023 to break into the black. In the meantime, Spot is growing in popularity aggressively. Monthly active users, MAUs, jumped 29% year over year to 320 million last quarter, while the number of premium subscribers rose 27% to 144 million. The company has successfully turned digital music into a social experience through shared playlists, and its investment in the future of podcasts became apparent in 2020 with an original podcast from former First Lady Michelle Obama, and the signing of podcast giant Joe Rogan to an exclusive multi-year $100 million licensing deal that could bring in millions of additional subscribers. Number 3. Tesla Incorporated. Tesla is the world's largest automaker by market value, with a market cap of about $607 billion, and is one of the world's leading makers of electric vehicles. It designs and manufactures fully electric vehicles, including luxury and mass-market sedans and trucks. It also has a clean energy company and produces solar energy generation and energy storage products. Tesla stock was added to the S&P 500 index with a weighing of 1.7% on December 21, 2020. Tesla posted a net profit in Q3 2020, its 5th straight quarterly profit, a major improvement after a long string of financial losses in previous years. Net income rose 146% as revenue grew 39.2% compared to year-ago quarter. The company produced more than 145,000 vehicles and delivered more than 139,000 in Q3 2020. Number 2. Moderna Incorporated. Moderna is a clinical stage biology company focused on the discovery and development of messenger RNA, mRNA, therapeutics, and vaccines. It develops mRNA medicines for infectious, immunology, autoimmune, and cardiovascular diseases. The company has multiple clinical trials underway, including the Phase 3 and commercial stage of Moderna 1273. A COVID-19 vaccine candidate. Moderna announced on December 18th that the U.S. Food and Drug Administration, FDA, had authorized the emergency use of Moderna 1273 after clinical trials demonstrated the vaccine had an efficiency rate of 94.1%. Moderna said that it would immediately begin delivering of the vaccine to the U.S. government. Number 1. NRG Energy Inc. NRG Energy is an integrated power utility company that produces, sells, and distributes energy and energy services to approximately 3.7 million U.S. customers. The company generates about 203,000 megawatts of electricity, of which 43% derives from natural gas, 34% from coal, and the remaining percentage coming from oil, renewables, and nuclear. NRG Energy announced that at the end of November that the Federal Energy Regulatory Commission, FERC, had approved its previously announced acquisition of Direct Energy from Centricia plc. The transaction is expected to close in early January 2021. The acquisition was first announced on July 24 with a transaction value of $3.625 billion. No matter how anxious you might be to leave 2020 in the rear view, your portfolio likely benefited this year from the COVID bump. As of mid-December 2020, the S&P 500 is up more than 13% for the year and almost 64% from its March lows. That's a good reminder to carry into the new year. Even when the market looks dreary, you never know what's to come. As you consider your investment opportunities for 2021, also think about your investment horizon, goals, and risk tolerance when evaluating new holdings for your portfolio. While individual stocks and sectors may be positioned for a particularly good year, broad-based, low-cost index funds provide you with exposure to many of the same sectors and stocks that may make it big in 2021. They also take the burden off you of picking individual winners. If you do opt for individual stocks, overall look for companies with strong profits, continued growth, as well as strong dividends and dividend appreciation, says Langness, which is sound advice for stock selection, pandemic or no. When in doubt, you can always reach out to a financial advisor for advice tailored to your needs.